Okay, we're going to prepare a statement of cash flows from this given information using the indirect method. So with the indirect method, we want to analyze our balance sheet and we're going to do our change in our different accounts, depending on what it is. And then they give us the additional information that we'll need to fill in the rest of the statement. So when we go to our operating activities, we always start with our net income. So then my net income, again, in this case, they give it to us. Sometimes you may have to find it on the income statement, but they give it to us. Then the next thing that we do is we add back depreciation expense, because depreciation expense is a non-cash entry, and this is the cash flow statement. So we want to only have expenses that are cash. So our depreciation expense, again, going down in this additional information, is $24,000. It's also the difference here, but you can't always go by that, because if there was a sale of an asset, that could be different. So in this case, they give us what it is. So we come over here and we add that 24,000 in. Okay, then if we had a sale of an asset, we would adjust the gain or loss here. But in this case, it says the land was sold at cost. So that means there was no gain or loss. If there was a gain, say it wasn't sold at cost, say it was sold for $10,000 more than cost and you had a gain, you would subtract the gain here. If it was a loss, you'd add the loss here because you're adjusting your net income, and then you would put all the cash down in the investing. Okay, but in this case, it was sold at cost, so we don't have to worry about it in our operating side. So then our next thing that we come to then, and there's no amortization or anything else, okay? So then we come to our changes in our balance sheet accounts. So our accounts receivable went from $76,000 to $85,000. So that would be an increase that increase in accounts receivable. And again, if you want to, it's 85,000 minus 76,000. Whoops, might help if I put all the zeros in. So that's going to be a $9,000 difference. Now, do we subtract it or add it though? So if our accounts receivable goes up, then that would mean that we have sales in net income. We would have debited accounts receivable, credited sales that we have not received the cash yet for. So since this is a cash flow statement, we're going to subtract that. So then that $9,000 is a reduction of cash because we haven't collected it yet. It's in our accounts receivable. Now inventory went down. So it went from 189,000 down to 180. So we have a decrease in accounts, or I'm sorry, a decrease in inventory of 9,000. So then that decrease in inventory is an increase in our cash. So our, inventory costs money to purchase, and that would mean it would have been sold out, and we did not replace it. So in a sense, we got a return of that cash. So that decrease in inventory of 9,000 is cash coming in. Okay, now then land and equipment are going to go down into our investing activities because those are long term. So then we go down to our current liabilities. So we have accounts payable. So we have a decrease in our accounts payable. And then again, that just to do the math of it, so it was 47,000, it went down to 34,000. So that's a $13,000 decrease. If we decrease our accounts payable, that means we've paid bills. So we've incurred the expenses, it's on our income statement, it's in our net income, we put it in accounts payable, and then we paid it. So then that would actually be a decrease of cash. We used our cash to decrease the accounts payable. So our cash goes down by 13,000. Bonds payable are always long term, so we don't have to worry about that. in operating section. We'll deal with that when we get down into financing. And then the same with common stock. So then that should be our total for our operating section. So I will do a little sum there. And we've got $146,000 of cash coming in from our operating activities. Then our investment activities, then we come up to our land. So our land has decreased by $25,000. So that decrease in land, if we go down into that extra or additional information, land was sold at cost. So if we sold the land, we received the cash. So that is a source of cash, or cash comes in. So we increase that cash flow. Our equipment increased by 50,000. And what does it tell us anything down below about that? Yes, equipment was purchased for cash. So our equipment goes up 50,000. And we purchased it using cash, so then that would mean it's a decrease in our cash. So here, I guess I'll put in so it's a sale of land and a purchase of equipment. Okay, then that is it, because we dealt with our depreciation expense up in the operating section, so there's no other long-term assets, and there is nothing else down in the additional information that deals with investing. So then we can go ahead and sum that. So that used 25,000 of our cash. Then our financing activities, we come down to our bonds payable. So our bonds payable decreased by $50,000, and here it tells us they were redeemed for cash. So we paid off bonds payable, 50,000. So then that is a reduction of our cash. Common stock went up by 50,000, and it tells us here common stock was issued at par for $50,000 cash. So if we issue the common stock, we receive the cash, so that's $50,000. Okay, then that is it, because then our retained earnings, well, no, that's not completely it. Our retained earnings, we don't look at the change, we focus on the cash dividends, because the change in our retained earnings is our net income less our cash dividends, but we've already started with our net income, so that part's already included. So the only thing we have to cover is our cash dividends. So we have cash dividends paid. That's a use of our cash, so that's negative, 70,000. Okay, so then that should be it then for our investing activities. So now we will sum these. And we used 70,000. So then now our net change in cash is that plus that, which is negative though, and plus that. So our net change in cash is 51,000. So we want to come back up and look here and double check, is that correct? So my beginning balance is 22,000. And then now if I sum those, I should get to my ending balance of 73,000, and I do. So then my cash flow statement actually all balances out. If you got to this section and you did not get to your ending cash balance, then you did something wrong in your cash flow statement. And sometimes it's easy to subtract one of these when you should add it. So always double check. If I am off, I would look at the dollar amount I'm off, and then first look to make sure I didn't just miss a transaction. But then you also want to look for like double that dollar amount, because if I were to add that 9,000 instead of subtracting it, I'd actually be off 18,000. So those are just some tricks that you learn from doing these problems and being off and trying to figure out where your mistake is.